Hello and welcome to my channel, where I share with you insights and analysis on the latest trends and developments in the world of finance and investing. Today, I'm going to talk about a topic that has been making headlines around the world: the collapse of Silicon Valley Bank. Silicon Valley Bank, or SVB for short, was one of the largest and most influential banks in the United States, especially for the tech and startup sector. Founded in 1983, SVB had over 40 offices across 15 countries, serving more than 30,000 clients ranging from entrepreneurs to venture capitalists to corporations. SVB was known for its expertise and innovation in providing banking services tailored to the needs of high-growth companies in sectors such as software, biotech, cleantech, fintech, and more. But on Friday, March 10, 2023, everything changed. The state of California's financial and banking regulators decided to close down SVB due to its deteriorating financial situation. The Federal Deposit Insurance Corporation, FDIC, was appointed as the receiver of SVB's assets and liabilities. This was a shocking and unprecedented event that sent shockwaves across the global financial markets. So what caused this collapse? How did it affect the economy? And what lies ahead for SVB's clients and stakeholders? In this video, I will try to answer these questions as best as I can based on the available information. First of all, let's look at what triggered this collapse. According to various reports, SVB was facing a liquidity crisis due to a combination of factors. A run on the bank. This means that many depositors started withdrawing their money from SVB at once due to fears that it might go bankrupt. This created a vicious cycle where more withdrawals led to more fears, which led to more withdrawals. This drained SVB's cash reserves rapidly and made it unable to meet its obligations. A spike in interest rates. The Federal Reserve raised its benchmark interest rate by 0.25% on Thursday, March 9, 2023, which was expected by most analysts but still had a negative impact on SVB's balance sheet. Higher interest rates mean higher costs for borrowing money, which means lower profits for lending money. This also reduced SVB's ability to attract new deposits or loans from other sources. A stock market crash. The failure of SVB also triggered a sell-off in the stock market as investors panicked about the implications of losing one of the major players in the tech sector. The S&P 500 index fell by 4% on Friday, March 10, 2023, marking its worst day since October 2022. The Nasdaq Composite Index dropped by 5%, while some tech stocks like Apple, Amazon, and Tesla lost more than 10% each. This further eroded SVB's capital base as it held large stakes in many tech companies. These factors combined created a perfect storm that pushed SVB over the edge and forced it into closure. Now let's look at how this collapse affected the economy. There is no doubt that this was a major blow for both the U.S. economy and the global economy as well. The U.S. economy suffered because it lost one of its leading banks that supported innovation and entrepreneurship across various industries. It faced potential losses for taxpayers who fund the FDIC insurance program that guarantees deposits of up to $250,000 per account holder. It experienced lower consumer confidence and spending due to fears of another financial crisis or recession. The global economy suffered because it witnessed increased volatility and uncertainty in the financial markets, which could lead to contagion effects or systemic risks. It faced disruptions in trade flows and supply chains as many international clients of SVB had their accounts frozen or transferred without notice. It missed opportunities for growth and collaboration with some of the most innovative companies in the world that relied on SVB's services. Finally, let's look at what lies ahead for SVB's clients and stakeholders. There is still a lot of confusion and uncertainty about what will happen next, but here are some possible scenarios based on the information available so far. For depositors, if you had an account with SVB, you should have received an email or letter from the FDIC informing you about your options. You can either transfer your funds to another bank within a specified time frame or wait until the FDIC pays you directly. The FDIC guarantees deposits up to $250,000 per account holder, so if you had more than that amount with SVB, you might face some losses. The FDIC is racing to sell assets and make a portion of clients' uninsured deposits available as soon as Monday, but there is no guarantee that you will get all your money back. You should contact the FDIC as soon as possible to find out more details about your situation. For borrowers, if you had a loan with SVB, you should continue making your payments as usual until you receive further instructions from the FDIC or the new owner of your loan. The FDIC has transferred most of SVB's loans to other banks or investors who will take over the servicing and collection of the debts. You should also check your credit report regularly to make sure that there are no errors or discrepancies caused by the transfer of your loan. For investors, if you had invested in SVB's stocks or bonds, you are likely to suffer significant losses as well. SVB's common stock was delisted from Nasdaq and its value plummeted to near zero. SVB's bonds were downgraded to junk status by rating agencies and their prices dropped sharply. The FDIC has announced that it will try to recover some value for shareholders and creditors through the liquidation of SVB's assets, but this process could take years and result in minimal returns. For partners, if you had a business relationship with SVB, such as providing services, products, or technology, you might face disruptions or delays in your operations. You might also have trouble getting paid for your work or receiving support from SVB's staff. You should contact the FDIC or the new owners of SVB's assets to find out how they plan to handle your contracts and agreements. In conclusion, the collapse of Silicon Valley Bank was a shocking and unprecedented event that had a huge impact on the market and the economy. It was caused by a combination of factors such as a run on the bank, a spike in interest rates, and a stock market crash. It affected millions of people around the world who were either depositors, borrowers, investors, or partners of SVB. It also raised questions about the stability and resilience of the banking system and the tech sector in general. I hope this video helped you understand what happened with Silicon Valley Bank and what it means for you. If you liked this video, please give it a thumbs up and subscribe to my channel for more content like this. Thank you for watching and I'll see you next time.